Alpha Blue Capital US Small Mid Cap Dynamic ETF, a deep dive into an innovative investment approach. In the ever-evolving landscape of exchange-traded funds, ETFs, the Alpha Blue Capital US Small Mid Cap Dynamic ETF, ABCs, stands out as a unique and potentially game-changing offering. Launched in December 2023 by Alpha Blue Capital Management LP, ABCs blends the active management expertise of a seasoned investment team with the diversification and liquidity benefits of passive ETF investing. This article delves deep into ABCs, exploring its investment strategy, potential advantages and risks, and how it might fit into your portfolio. A pioneering approach to small mid-cap investing. ABCs adopts a dynamic active approach, seeking to outperform the small mid-cap market through a two-pronged strategy. 1. Active Core. This component leverages Alpha Blue Capital's 30-plus years of experience in fundamental bottom-up security selection. The team meticulously identifies high-quality, undervalued small and mid-cap companies with strong growth potential. These holdings form the core of the ETF, aiming to provide a foundation of alpha generation. 2. Passive Tailwind. To enhance diversification and mitigate risk, ABC strategically allocates a portion of its assets to passive small and mid-cap ETFs. This passive component acts as a tailwind, capturing broad market beta while mitigating the inherent volatility of active small-cap investing. This innovative approach aims to address several key challenges faced by traditional small-cap investing. 1. High volatility. Small-cap stocks tend to be more volatile than their large-cap counterparts, making them riskier for some investors. ABCS's passive tailwind helps to dampen volatility and provide stability. 2. Limited liquidity. Smaller companies often have lower trading volumes, making it challenging to buy and sell shares without impacting the price. The ETF structure of ABCs provides greater liquidity for investors. 3. Research costs. Actively researching and analyzing small-cap stocks can be time-consuming and expensive for individual investors. ABCs leverage the expertise of a dedicated investment team, making this research accessible to a broader audience. Potential advantages of ABCs. Several potential advantages make ABCs an intriguing proposition for investors. 1. Enhanced alpha potential. The active core component seeks to outperform the market by identifying undervalued gems, potentially generating alpha beyond the passive market return. 2. Diversification and risk mitigation. The passive tailwind component provides diversification benefits and helps to mitigate the inherent volatility of small-cap investing. 3. Lower fees. Compared to actively managed small-cap mutual funds, ABCs typically boasts lower expense ratios, potentially improving long-term returns. 4. Transparency and liquidity. As an ETF, ABCs offers real-time transparency into its holdings and provides superior liquidity compared to individual small-cap stocks. Potential risks to consider. While promising, ABCs also comes with its own set of risks that investors should be aware of. 1. Tracking error. As an actively managed ETF, ABCs may not perfectly track its benchmark index, potentially leading to tracking error. 2. Concentration risk. The active core component may hold a concentrated portfolio of stocks, increasing the risk of losses if individual holdings underperform. 3. Emerging track record. As a newly launched ETF, ABCs has a limited track record, making it difficult to assess its long-term performance consistency. 4. Management dependence. The success of ABCs heavily relies on the skill and experience of the Alpha Blue Capital investment team. Suitability for your portfolio. Whether ABCs is suitable for your portfolio depends on your individual investment goals, risk tolerance, and investment time frame. Here are some considerations. 1. Investment goals. If you seek alpha generation and potentially outperform the small mid-cap market, ABCs could be a compelling option. However, if your primary focus is capital preservation or income generation, other asset classes might be more suitable. 2. Risk tolerance. ABCs carries inherent risks associated with active small-cap investing. If you have a low risk tolerance, a more conservative investment approach might be preferable. 3. Investment timeframe. As a long-term investment vehicle, ABCs is best suited for investors with a time horizon of 5 years or more. The active core component's potential for alpha generation is likely to be realized over the long term. Conclusion: a compelling option for discerning investors. The Alpha Blue Capital US Small Mid Cap Dynamic ETF ABCs presents a unique and innovative approach to small mid-cap investing. Its blend of active management expertise and passive diversification has the potential to offer investors enhanced alpha generation, risk mitigation, and improved liquidity. However, it is crucial to carefully consider the potential risks associated with active small-cap investing and ensure that ABCs aligns with your individual investment goals, risk tolerance, and time frame.